Hello and welcome to Moneylife. This is Sucheta Dalal. This week we talk about banking. On 10th July was the 51st anniversary of Bank Nationalisation. This is a day that at least bank unions like to celebrate. But this year there's a big question mark. It's almost as though every stakeholder of the banking system, whether it's a customer, the borrower, the bankers themselves, everybody seems angry, frustrated, everything is in a state of flux, and people are uncertain and unhappy. It can easily be fixed as long as someone pays attention to it. In fact, 51 years ago, bank nationalization was considered the best thing that happened. Now, year after year, when there are big write-offs or bad loans, especially benefiting only large defaulters, and sometimes farmers and others, you begin to wonder whether the exercise was worth it. Strangely enough, it is the All India Bank Employees Association that put out a release which actually put the number of these write-offs. In fact, look at this chart over here, and it shows you how over the last 50 years, or in fact just this century, the amount of write-offs have increased exponentially. So in 2001, it was just 5,555 crores, amounts that are written off only by public sector banks. And this year, 2019, in fact the latest figures are not available, it's 1,96,849 crore. That's a shocking number. If that weren't enough, the government, the Union Cabinet has recently cleared over 12,400 crores of write-offs for 3 general insurance corporations. Remember, all this money is eventually coming from the taxpayer's pocket, because every time banks have to be recapitalized, it's done straight through the budget, or it is done by all kinds of charges that are levied on us. So don't make any mistake about it. It's not about banks writing off loans. It is about us, the taxpayers, paying for it. It's not even necessarily taxpayers. It is we, the people of India, who eventually pay for it when it is public sector banks. Now, why are customers unhappy? Like I said, because the interest on term deposits has been falling continuously to the point that today we are in negative interest rates. People who are senior citizens who want to live off the interest earned on term deposits of banks, they find that the amount of interest paid does not even cover inflation. That is called a negative interest rate. How are people supposed to survive if costs go up and you don't earn anything and you have retired and you don't have the luxury of pensions? So people are frustrated. Things that should have been part of normal banking, that were part of normal banking. I mean, the checkbooks beyond a certain number of check leaves, cash transactions beyond a point, ATM withdrawals beyond a point, minimum balances, all these are being charged. And that money that is extracted from us, it goes eventually to pay losses that banks are writing off every time. We've also, through another article that was written by Yogesh Sapkale, busted the myth that the banks recover this money when it's technically written off. In fact, he pointed out that not even 7% is actually recovered. Now, if all that weren't enough, customers had another reason to panic, which is a talk by RBI Governor Shaktikanta Das at a State Bank of India conclave in early July. I think it was around 11th of July. It was a good talk. The governor is an open man, and he spoke about a couple of things which in fact triggered more panic. The positive side, he said he is working on something to do with PMC Bank and will find a solution. He also mentioned at that talk that banking supervision is being ramped up, leaves a lot to be desired, and they are finding ways to crank it up. Hasn't happened so far. So far, the Reserve Bank of India is like the police in a typical Hindi cinema. They come after the hero has caught anyone. So in this case, they come in and begin to inspect after something has collapsed. Whether it is PMC Bank, whether it is ILFS, they have arrogantly ignored whistleblowers. So when the governor says that they're going to keep their ear to the ground, well, we are skeptical. We have to wait and watch. But he also said that in order to resolve a PMC bank, he needs legislative changes and a resolution corporation. In fact, one of the things that he mentioned is that shocks to the banking system and the financial system, and we've had a lot of shocks in the last 3 years, starting with the Diwan Housing, HDI, Yes Bank, where one bunch of people have lost money. We've had constant shocks. The governor now says that what would happen once in a decade or once in a lifetime is going to happen more frequently. In fact, nobody has even really evaluated what is the cost of this pandemic and the lockdown, because we're still in a lockdown in major parts of India. The dirt is still going to come out. So it is something that really worries us as bank customers, because we don't know what kind of shocks we're in for. Middle of this, when the governor says he wants a resolution corporation, great news. But a resolution corporation comes with a little side thing that is dangerous for us. It means that there is going to be a revival of the financial sector FSDR Bill. Now, I have written about this before. I have talked about it in a video blog. You can take a look at it. One of the things that is most worrisome over there is that there is a bail-in clause. What does the bail-in clause mean? That above a certain limit, deposits of the large depositors could be converted into equity and used to recapitalize banks. Why are they doing this? Because they do not want the government to have to bail out people all the time. It is a global commitment that has been made by India, and clearly the government does not have money to keep recapitalizing banks. Like I said, we don't know what the shock of the COVID pandemic is going to be. So, is it something for us to worry about? Yes. On the other hand, we now have deposit insurance of 5 lakhs. So no bail-in happens to insured deposits. But 5 lakhs is a small amount of money if that's your retirement fund, right? So it also means that all of us who bank with public sector banks or private banks, and especially private banks, need to be on edge all the time, watch their results, watch the credit rating, hope that the credit rating agencies are doing their job, hope that the regulators are doing their job, and there will be no PMC bank like shock, right? It also means that we need to distribute our risk and keep accounts in 4 or 5 banks so that we have a larger chunk of money that is guaranteed with this 5 lakhs. That again is not a happy situation. You have all kinds of KYC requirements, minimum balance requirements, and you have relationship managers of all those banks constantly trying to hard sell things. You have the dangers of digital fraud. Grievance redress is abysmal. We've been trying to push the governor to say, please pay attention to grievance redress. It is not happening. So, from the customer point of view, it is a tense time, and it is a time when we have to be on alert all the time. Now, in this situation, the government is merging a whole bunch of public sector banks. We are safer in public sector banks. But the irony is that everybody working for public sector banks seems to be so frustrated and unhappy. Every day there's an outpouring of anger about how they are treated and what is going on. So let me describe a little bit about this angst of what bankers are going through. It's largely public sector banks for 2 reasons. One is that they are forced to do things that maybe other banks are not. They have less resources, and maybe private banks are treated slightly better, or private bankers are also tweeting under pseudonyms and they don't dare to come out in public. Now, let me describe a couple of things that public sector banks have valid grievances about. The bankers and employees, these need to be addressed by talking to them. So, one of the first things is about their protection and safety. As you know, banking has been declared an essential service. Through all this lockdown, we've been able to access our bank accounts. That happens because bank employees have been forced to come to work. This has meant horror stories for them. We've read about how some of them were bashed up on their way to work because the police wouldn't recognize their identity cards. Then they are working. Yes, they wear masks, but without adequate social distancing, without things being... So in one case, there was a printer not working, and a constable in Surat comes and beats up an employee really badly. This story is not limited to Surat. It is repeated every day across the country, and bankers have been posting visuals, posting videos. There is zero response from the establishment. These are an essential service. So while the government has gone out of its way to say, Doctors should be protected. There's not a word about bankers. Obviously, customers are frustrated. Sometimes they bring politicians with them. They are aggressive with bankers who are defenseless, who are working with sometimes not even the full strength, and they are constantly attacked. This can't go on. But the only time that Finance Minister Nirmala Sitharaman reacted was when there was a furor over Surat. In fact, take a look at this video. We're showing it to you in the blog. It'll show you how she was treated. But even here, it is being buried. There is not much action, and there are the kind of provisions under which the constable has been proceeded against is so trivial that he is going to get off. This obviously can't do, because they are frontline warriors like others, and you have to treat them properly. The other issue that bankers talk about is the number of people who have actually contracted COVID and died. So there are some bankers who've been tabulating it. There is one chart that I'm showing you here, which has been tabulated by bankers, put out on social media, which says 58 bankers have succumbed to COVID and over 1,000 of them are infected. They point out that even when this happens, there is no proper social distancing, there's no quarantine, there is no rotation, and they are asked to come to work every day because they're not a vote bank and the political establishment doesn't care. Now, I have a dozen letters written by various bank unions to the RBI governor, to the finance minister, but so far as we know, nobody has paid attention to it. There was a time when unions were considered powerful, but strangely enough, nobody is listening to them. And obviously, bankers have their own problem. Now, the third part is what happens when they succumb? What happens when they contract COVID? So you come to the issue of insurance and the death benefit. So today there's a death benefit of 20 lakhs. Bankers say this is not enough. If they are called frontline warriors, they should get 50 lakhs, which is given to doctors and policemen and others. Now, some say that this is debatable, but there's clearly a lot of uncertainty and there are different kinds of compensation that are already in the system. So some people have 30 lakhs. Bank of Baroda has actually said it is going to enhance it to 50. Why is there no announcement of the same compensation across the board? There is nothing specific to COVID except the one which Bank of Baroda has talked about, where it says 50 lakhs. Now, if Bank of Baroda is public sector, then all public sector banks should have the same standards. That's not happened. In fact, State Bank of India, as part of their wage settlement, has even opted out for it. Now, one bank union tells me it's not just 20 lakhs, but they also get somebody who's part of the family on compassionate grounds gets a job. The truth is that not many people get a job. There are all kinds of limits to it. It happens when somebody below 35 dies. I'm not going to get into it because these are issues that have to be standardized. When you call them an essential commodity, ask them to come to work, and it is simple to do. It's part of basic HR that you have to be concerned about the people who work for you. You have to discuss it with them. You have to sort it out. You can't have an angry sea of people helping you to bring the economy back on track, because these are the people that are required. They are doing an essential job. We require them. Businessmen require them. The government requires them. So for heaven's sake, talk to them. Now there is the insurance part. This is negotiated by the Indian Banks Association, which is like a lobbying organization for banks, but the RBI has empowered it to do wage settlements. It's not open to RTI, it is not answerable to anyone. It negotiates settlements with unions. There is a limit to which different categories of bankers are entitled to insurance. There is nothing specific on COVID. On one hand, they say that it is unlimited. The All India Bank Employees Association tells me there's a 100 crore buffer. Employees themselves say it's not enough. The All India Bank Officers Association has put out a specific case where they talk about how, and we're citing this here, flashing it for you, but a big chunk of the bill, as usual, is for PPE and masks, which is not paid for by the insurance company. Now, when you're forcing bankers to come to work, for heaven's sake, can't this be resolved with dialogue, with compassion, with empathy. That is all that bankers are asking. They're saying that pay attention to us, standardize things, take into account that we are working during COVID. All this tells you that A, bank supervision is absent. We have only the good intentions of the RBI governor. It's not enough that he's open. He has to get the RBI to get out of that ivory tower and start working. So supervision is an issue. The possibility of what comes in through this FSDR bill is a question mark. Things like bail-in will probably be introduced in the next session of Parliament. We don't know what they are. Our money as customers is being gouged in various forms as charges, and also the kind of mis-selling that is being done by banks to enhance their revenue. Happens more in private and foreign banks. There are any number of complaints. So this is the customer's despair. And then I've told you what bankers are going through. This state of affairs is bad for the nation. Can't go on. It is easy for the government and for the finance minister to handle it. Reach out to them, for heaven's sake. Take into account our problems. Find a way to resolve them. Thank you.